I think let's start. Thank you, everyone, for joining Joint Custody. I'm Benjamin Duve, or Ben, your host. I'm Global Head of Partnerships at GK, former central banker, banking executive, and very happy to be here and have you listening in, but more importantly, also to have Roy Ben-Hur, digital assets financial services leader at Deloitte. I'd say the digital assets guy at Deloitte usually, um, but that's for a different discussion. Thank you for joining, Roy. And you want to do a few words of intro, or should we directly dive into the
Yeah, no.
questions?
First of all, Ben, very glad to be here. Thank you for hosting it. I think as you've said, you and I known each other for a good number of years. Got the privilege of leading blockchain digital assets for financial services for our consulting business. And it has been an interesting journey. I know we're going to get into it over the next half an hour, but really excited to be here today.
Well, thanks for joining. And then let's dive into it immediately. And that's the first question that lends itself. How did you get into digital assets and crypto? And was there a pivotal moment for you to do so?
So it's mostly a story of picking up opportunities the way I see it, Ben. I've been with Deloitte for over 25 years. Yes, I'm aging myself. Started mid-1990s in Tel Aviv, had the opportunity to work in London late 1990s, and joined Deloitte in the US in '04, and I've spent most of my career in our capital markets area. And then in 2015, while I was aware of what I call the broader blockchain and Bitcoin, before that, I had a client who called in and asked for support in getting a broker-dealer license. And part of the process was to ask the client, what's your business case? And the client approached me and said, well, I'm trying to tokenize securities. And my question to him at that point was, okay, so you need to explain to me what tokenization is, so I can start working on it. And what gradually was an area of interest for me over the next couple of years, working around it, pretty much gradually consumed most of my time, and where I spend most of the day today working across our financial services clients, both purely TradeFi as well as native crypto moving into this space, really exploring what the future of the digital economy, or what the future of financial services might look like, leveraging blockchain digital asset technology.
It's super interesting, right? Basically, you say, because I got two sets of people come in, some from the business. I actually got a lot of people who I talked to, they come from a background of compliance, right? In the beginning, banks were very afraid of crypto and digital assets, so they got compliance people to step up. But I think the common thing, and you mentioned as well, is you saw the opportunity and just grabbed it and went for it, right? I think that's what it says. Interesting, and you had the curiosity to then just step up.
I mean, that's what broadly being, and maybe that's the story of being a consultant, right? You got to be alongside your clients as they explore new areas. If I go back again, I'm aging myself, dealing with Y2K back in 2000, and then dealing with a number of changes. Clearly now, speaking about artificial intelligence, how it works. But the point is, there is an area, pick it up, learn it, explore it. Blockchain digital asset, again, if I go back now and I can't think about it, I've been doing it almost 10 years. 10 years ago was a really nascent area, some, emerging technologies. Now it's much more still area to develop, but much more mature in terms of the capabilities of the players in the space.
I agree, and that's the question I wanted to ask. You've been in digital assets, we know each other for quite a few years now. How difficult was it in the beginning to convince Deloitte to invest the resources and the time into the area, compared to how much are you sought after now, and probably can help yourself being dragged into a lot of client discussions and other topics?
So I will look at it the two ways. First of all, I've been privileged to have a lot of partners who actually have been in the space earlier than me. A lot of our tax and audit and even consulting partners who were there early days because we had a client who approached us and said, I bought X. How do I deal with it? This is the thing about the Bitcoin. I deal with it from a tax and audit perspective. But then I'm developing the solutions. Can you guys provide me the advice? So clearly there were people at Deloitte who were working around that and kind of exploring what this technology may mean, what are the capabilities around that. But I wouldn't undermine kind of the early days, the view that was across the industry about whether the technology itself or the underlying assets that are around it are used for nefarious actors and are used by shady actors that impacted the ability of an organization such as ourselves to say, am I willing to risk my reputation to be there? So we were and we still are very thoughtful in terms of what are the areas we want to play in, who are the clients we want to onboard. The other point is also what is the opportunities out there in the market, right? And so we dealt with a numbers of ups and downs. If we think about clearly 2017, 2018, ICO boom, and then the crash after that. We've seen it 2021, 2022, where there was 20 increase in the market until, what happened in the market events with Terra Luna and FTX. And then at least from my purview, sitting in the US, there was a little bit of retrenchment, post that, and now everything kind of changed, right? And then again, the view from Deloitte has been across the board. We believe that there is use in the technology. We believe we have clients in this space. Just everything's got to be done in kind of true and tried from you mentioned risk management perspective. Internally for us is making sure that we manage that risk component as well. We understand who are the players. We know where our clients and helping our clients operate in this, now becoming a more clearly regulated environment on the US side.
Yeah, and I have to agree, right? I've seen it also from inside the US bank, being before also in a European bank and the digital assets field. It was quite astonishing. You move from Europe to the US, and suddenly the US is much more restrictive, much more limited. It was very difficult to have a discussion, digital assets versus crypto. Everything was crypto, everything was a scam. I remember those days, and they weren't fun, but a lot has now changed, right? So the current regulatory environment and the trajectory in the US has completely changed, right? And I'm sure, and you already touched on it, there's a Deloitte position, but also what's your perspective on what that means for traditional finance? Maybe also from your vantage point as someone who's been in this industry for so long.
So it will clearly, if we look at the last give or take now 10 months in, Ben, with the new administration coming in with a view around we want to use blockchain digital asset as a potential platform or technology to drive innovation across our capital markets and across our broader financial services ecosystem. And using that really to change or really challenge the existing thinking within that ecosystem. If we go back to the presidential letter that came out in late January of this year, which outlined kind of the direction that the current administration would like to go into, following through what Genius Act that was enacted in July means across now what we call kind of the stablecoin space or even the broader, digital payments on digital assets. And hopefully what will happen in the introduction of the market structure bill, the Clarity Act or the RFIA, which is the one that the rules that, or the regulation, sorry, the rules that will come to the Senate. All those changes coming together will mean a massive change across our broader financial services systems. You already see it across the board. But I will also say, as someone who's been here, to your point, for a number of years, right? We've had banks or other financial services who were exploring these areas, as early as I mentioned, 2015, even earlier than that. A lot of them were slowly, gradually moving into this space because of the lack of clear regulatory around that, and the way we have advised our clients, and you kind of mentioned it as well, right? Coming from a background of risk and controls, is basing anything you're doing around existing regulatory mandates, because there was no clear regulation in the US. So using true and tried frameworks, FFIC handbook in the US, a few others to drive that, or leveraging what some of the states in the US did. Now, with this new paradigm shift that came across with this new administration, I would even say that in some areas you see some of the government and the regulatory agencies challenge the existing ecosystem to think about and move faster and broader in terms of adoption, some of the capabilities of the technology around it. And again, it will be interesting to see how things move around. Clearly, by July of next year, we will have the final Genius Act rules out there, introduced mainly by the OCC, by the other areas. And again, hopefully, we will see the market structure bills between the Senate and the House converge, between Clarity and the Responsible Financial Innovation Act. All of that will change, already changing, but change faster the broader ecosystem, US side as well. I'm not talking about it globally.
So if I stand you correctly, there's a lot of change. Let me say I'm a former regulator and a former banker. Now I'm in a more crypto digital assets prone environment. For us, I really like what you say. I work in a shop where we go ahead and provide the wallet for everyone, right? We provide the wallet infrastructure. Everything you say points to a new market infrastructure. I see that as everybody needs a wallet down the road, so great for us. But if I see it on the other hand, there is rocky roads for some, because you mentioned stablecoin. When I look at stablecoin, I see at value being transferred between consumers or between companies, for example, without any money moving between bank accounts. So there's no Fed clearing anymore. Nothing is in bank accounts. It's basically people transact in US Treasuries directly. And the books and record of that is with a stablecoin company. So the banking sector is involved in servicing around those treasuries. And I think there's a lot of interesting business there, but some of the core businesses are under pressure. So, maybe I'm more freely can mention, for me, it's a big threat for certain type of banks, mid-sized banks, which have a lot of maybe remittance services, have a lot of people who came from all over the world to, for example, work in the States and then transact into business in their home country. Suddenly, all those flows will go through stablecoins. And then just imagine, and that's unimaginable, some of the credit card companies start to clear in stablecoins and not through regular clearing, and don't use the Fed clearing windows anymore. I think it's a very interesting times out there. But on the other hand, I talk to former bankers, say, yeah, but we had all these topics in the past. In the end, right? People go to stability, they want certainty. So interesting times for sure.
I agree, and I agree kind of with the last comment you've made, right? So it's an issue of evolution, right? It's an issue as when Roy and Ben would transact at the end, they shouldn't care whether it goes through FedWire, FedNow, or between stablecoins. I want to get it the fastest, the cheapest, the safest, right? And clearly, different people will have different risk tolerance, but at the end of the day, you and I shouldn't care about the technology that's running behind it. If we are a user, of where is an institution. The question would be a question of how do we drive adoption and how the industry drive adoption and what the market is going to react. If you think about it, clearly the use case of cross-border remittance using a stablecoin, it's kind of clear where it's cheaper, it's faster in most corridors, Ben, I'll say it as
Yes.
well. There are some corridors where, and
Especially if the
yeah,
financing on the back of it, tapping
it's
a bank's balance sheet in foreign trade is still cheaper to go into the
correct,
digital
correct.
areas. Yeah, for sure. And
Correct, correct. So I think there are a lot of players are out there that are already exploring where are the inefficiencies that I can go and make instead of today. Let's say, I charge 10 cents on a dollar. I could bring it down to 5 cents, and that's my margin. That will clearly happen. The question it would be is if I think about again from a Genius Act perspective, the view that Secretary Bessent and other institutes spoke about, $3 to $4 trillion of stablecoin within 5 years, 3 to 5 years. In order to get that, it will not be the area. The question would be, from my purview, going back to your earlier point, how will we get institutional, how will we get corporate adoptions to start using that and then starting moving that money? And if you're a player in that space, or if I am a controller who's sitting in a company and operating in this space, the question would be, for me, would be, what the benefit can I make if I put my money in a stable coin, I manage that globally? Can I get better efficiencies, better floats, better interest rate? Do I feel secure, less? For all those questions got to be answered. Some of them are answered today. Some of them will take time. I'll be clear. Still need to fraud to address the issue of fraud. We need to still address the issue of if something happens today, I can in most cases call my bank and say I can recall that money, right? Or recall the transaction. Can you do it with stablecoin? Yes or no? You cannot today. I know there are people who are exploring it. Will it get there? I personally believe it will. It will just take us time.
so, but there's one thing. So, in the best case, it's a rewiring, but there's always margin compressions, right? That's what I take out of. We don't know how it plays out, but the one thing we know for certain is margin compression, right? And then I agree with you in the payments thing. I think, and you touched on it earlier, right? Capital markets, capital efficiency, and I think that's a whole nother session we could do on that. But I think that's where it gets super interesting, right? Because that actually is a use case which doesn't hurt anyone, but it just makes or only certain players who solely thrive on inefficiencies. But overall, I think it just makes the overall system just more robust because you can move collateral and others around so much more efficiently globally.
And that's exactly why one of the first use cases we're all hearing about is collateral optimization using digital. I mean, there are already users who are doing it around it. Once you get stablecoin out there, the ability to use stablecoin to manage collateral in intraday payments versus the end of the day. Again, the implication on bank balance sheets, the implication of the users are going to be huge. And if you combine in my other hat, I'm still involved in kind of traditional capital markets activities. We've done a lot of work around in the US T+1. Europe T+1 is coming in two
Well,
and a
it's
half,
still a
3 years in
yes,
2027.
still a big storyline, right? We talk in
Which,
digital about instant and how instant is instant, but
yeah,
the traditional still talks to going from 2 days to 1 day
one
settlement.
day. Yeah. But when you get that 1 day settlement, which is still coupled by the ability to move the money and settle it which is a legal issue,
Yeah.
settle the cash, and then you settle the asset leg as well. That's a huge benefit that, again, a lot of smart people in the industry, and we are working with a lot of them, trying to solve right now to say what are the best use cases that will get the faster adoption across the industry. And again, you mentioned collateral management, which is clearly one of the
And
fastest
there's so
ones.
much money in it, it actually makes it worth building, right? There's so
Yeah,
much efficiency and everybody wins. It's an area where there's very few losers. I think that's the interesting bit. But maybe we come then
yeah,
already on started into the next question. So probably a lot of firms now come to you. They want to digital strategy or at least an advice on what should be their digital play. What is the most common thing you say or you see people want to go to? And what is your advice how to get started? Because I think there's still a lot of players out there who might have dipped their toes in a little bit, but they don't really have either real strong digital play or a strategy overall. And then secondly, if I'm a startup, we have a lot of digital native startups who work with that. How can they help them fill that gap and pitch to those traditional firms?
So I'll look at it in a couple of ways. So most financial services clients, with the exception of few, their digital asset unit or person in some cases was for up until a year ago, a guy or unit who sat kind of at the corner, was doing a lot of exploration, wasn't really doing a lot of the real-time use cases, was more POC around it. So first and foremost is working with any of our clients is to make sure that the top of the house has understanding of what opportunities are, making sure that there is a central leadership team that understands and is committed to driving that. And that goes through understanding what are educating the broader business, but I also look into this, my risk and compliance and legal group across the board, engaging in the market and understanding. I think you spoke about, some of the banking challenges, but understanding what are the opportunities in the market, what's the business model redesign that we as an organization, I mean, not we as Deloitte, need to do, right? What are the business use cases that will apply to us? And what are the ones that I can get a relatively quick out there product to the market that I can start building muscle memory and build the capabilities to get myself there, while also looking at what capabilities do I have in-house? What do I need to do to get it approved? Do I need to change my risk appetite? Do I need to get, in most cases, I need to get new product approval through my approvals. All of that's got to
An
happen.
NPP product
Yeah.
approval, I mean, that's a year.
Yeah,
That's already a
so
year
that's
right there.
that's exactly the point. If I get a new product approval and it takes me a year, can I wait a year with how the changes are happening in the market? And if I'll take that as an example. If we think about Genius Act and the implication of again stablecoin becoming an approved payment rail at the minimum in the U.S., and you're thinking about, let's say, early 2027 when this is going to happen. I need to start acting now. And also to add to that, Ben, I think about the capabilities, it's the risk management, it's kind of the technology capability, all of those stuff I need to build in. Clearly understanding the ecosystem, who can I partner with? I think that dovetails into your question about the startup, right? I have small startup, I have medium startups, how do I address that? How do I deal with my third-party risk management? So I'm a bank. I have my third-party risk management processes. I need to start working with that startup. So if I put my views in terms of I'm a startup now trying to work, you need to understand the processes that those institutions will go through. They will not just take, Ben Duve as very interesting technology. You will still need to go to risk and legal and third
Yes.
party. That takes time. It may take 6 to 8 months at the minimum. Just if we think about the history, that's just the way those institutions operate. Again, we try to help a lot of our clients or a lot of our I'd say crypto native startup clients or operating in the space in terms of helping them navigate that, understanding also what are you trying to sell. And my only analogy is, again, back into 2020, 2021, we had a number of players who came across and said, well, it's all permissionless. I'm going to do all this stuff. I'm going to do KYC, AML, and others. Clearly, you need to understand you're still operating within a network and within a set of boundaries that the banks need to operate in. And if you're trying to challenge some of it, the banks will not accept you. So you also need to understand what am I selling, and how does it operate within the current regulatory structures that the banks still need to operate in?
To understand the banks, I get it. And the second piece is, as a more practical advice, if you have a product you can sell, get into the vendor approval process as early as possible, even with a small bit, because then the follow-up
Yeah.
sale is much easier, right? Because if you tell me I need 6 months to get in, maybe there's a small product I can get over the line, but then I can't sell my big product later on, because once you're an approved vendor, I understand you're in, right? That's the other way around, right?
Well, correct, but you also need to think about, whatever new product you need to introduce, you may need to go and kind of refresh whatever
Yes.
processes you need to do around it. But at least you've built the relationship, you know how to navigate that, and you've built the inroads into those institutions, right? So you know who's the digital asset person at bank X, Y, or Z, and that person most likely, if again, should the technology and the product be interesting, will help you navigate their own internal ecosystem.
That's pretty good. So now I always try to do a more challenging question at the end, right? My challenging question to you is I'm a startup, right? And I want to get the Roy Ben-Hur excited and involved and or maybe even get you into my startup, right? So basically get you involved in what I do. What do I have to pitch to you? So in turn also, what are the areas you think are so interesting that you would actually be willing and able to jump and join, right? So what are the true interesting bits that excite you so much that you could get excited enough to get involved?
So there are, and actually I'll touch upon there. It
And
might be
you're
the
very happy at Deloitte, always saying that,
no,
right?
and I'm not leaving Deloitte, but no, but there are three areas that actually interest me across the board right now. Is one and foremost, and I think I touched upon it, is where tokenization is going to take us. Again, from a U.S. perspective, we have a driver across coming all the way from the clearly I spoke about the Senate and the House, but also the SEC and CFTC around. Let's see what we can do around tokenizations on any products that are driven there that really adding value and getting inefficiencies out of the process. And I've been in this space for 20 years in the US, so I've seen a lot of the inefficiencies that exist in this space. Anything you can drive out of it will be, again, something that will really catch my eye in terms of, yeah, this is a product, there is a lot of inefficiency here. This is something that we can get adoption relatively fast, and also there is regulatory clarity or direction towards regulatory clarity. For me, Ben, that's clearly item number one. There's a lot of interesting technologies out there, but again, more innovation is coming around that. And the interesting stuff is also now financial services companies and banks clearly are stepping into this space. The other interesting area that I believe is the future is kind of the convergence between AI and blockchain digital asset, right? So there's a lot of discussions around agentic AI and how they can start operating on behalf of Roy or behalf of Ben and do stuff around it. There are still requirements that need to be happened that you understand that there's truth in that AI. You understand that the payments are happening around it are all verified and again and truly operating within a regulatory manner. For me, I believe that's the next area of innovation. This combination of payments and agentic AI. There's a lot of interesting stuff happening around that. And again, I believe that's going to be the other area. And then lastly, and that's more, I'll say, the nerdy area in me is kind of the killer app and the stuff I started picking up over the last couple of months, which is where are we going to go in terms of now the upcoming changes that are going to happen with the introduction of this combination of agentic AI and the underlying technologies and where the underlying changes with potentially excuse me seeing some of the underlying technology that's going to come and potentially change the way tokenization is all going to work. A couple of years ago, we put a paper and we spoke about kind of convergence versus collision. And when we see that convergence is gonna happen now between this broader ecosystem coming together, TradeFi and native cryptos coming together. That's for me the last item that will be of interest to me.
Super interesting. We could talk now forever because all of these three topics probably are worth a deep dive, but we are already at the end of time. So thank you everyone for joining Joint Custody, and thank you, Roy, for being here. Such an insightful discussion. And I just can advise anyone, if you see Roy somewhere at a conference or somewhere else, grab him and have a chat. I think it's really worth it. And I think add him to LinkedIn. You always see some interesting stuff there as well.
Thank you, Ben. Have a great morning.
Thank you, Ron. Have a good day. Bye.